Eric Mwathe with Mwathe.com with the US market analysis for the weekend of April 9th and April 10th, 2016. Let's take a look at markets here with about 40 minutes to go before the close of the week. Let's take a look at how things are shaping up right now. Markets are unchanged, again, with about 40 minutes to go before the end of this trading session and the end of the week. Let's take a look at the Nasdaq Weekly to begin with. And we can see here that the Nasdaq is still showing resistance on the weekly chart. If you take the RSI highs, we've come back over the last couple of weeks. We've hit that line and we are already pulling back. So until the market can clear that very well-defined line of resistance, one can assume that the next swing trade in the market should be down. Otherwise, market bulls would like to eventually break out above that line of resistance. So until we see a breakout, one has to assume that this suggests that we are due for a pullback. Keep in mind that the market had a nice run coming off the lows here of early February. Nice run, probably due for some type of a pullback. Also, we are coming back to test the break line. If you take the break here in, let's call it about August, I would say, August of 2015. So this break in the RSI brought the market off the highs in the Nasdaq. We can draw a line from there. And this line has been a problem for the Nasdaq since then. You can see here uniform activity rejection for the highs there. Rejection for the highs there on a weekly chart. Rejection again there. Late December for the highs there. And we are coming here in April. We've hit that line. As long as we're below that line, one has to look for a pullback. Otherwise, again, if the market is to eventually move higher, it needs to break out above that line of resistance. So until the market can clear above those two lines, we have to assume that more than likely this pullback has some downside that is still remaining. If we take a look at the Dow Weekly, and here we are taking a look at a 3-year weekly chart, so 3 years worth of weekly data for the Dow, and we can see that there's a topside resistance. If you take the weekly closing highs, it's a trend line that looks something like that. And as of right now, you can see that we had moved above that trend line, but we are back below it, which might suggest around here is where one can expect a continued pullback because of that rejection trying to break out. As of right now, it's failing. Take a look at the topside resistance on the Dow, similar to that of the Nasdaq. We've come and hit that line as we were suspecting. Now we are showing a pullback potential. Also, if you take a look at the break, so this break here off the highs, the break in May 2015 brought the market off the highs there. On a weekly closing basis, we can draw a line from there. And you can see that the red line has been a problem for the Dow. It was resistance here for the highs right there. Again, resistance here for the highs of December, November time period. And now here in April 2016. So until the market can clear those resistance levels, if the market can clear the two lines on the RSI and also move above this weekly trend line, then we can turn bullish. For now, this chart does indicate that market has hit resistance and we should be positioned to the downside for now because of the signals that the market is giving us. If we take a look at the Dow Daily, we can see that on a day-to-day, the Dow was attempting a breakout above the recent daily closing high for the month of March. As of right now, that breakout seems to be failing. The level to watch there that the market needed to hold above was 17,623.87. Right now we are trading below that, suggesting that the short-term breakout on a day-to-day basis seems to be failing. There's also another line connecting daily closing highs on the Dow, which should be something like that. And right now we seem to be back below that trend line, suggesting that potentially this was a fake move here. The more we stay below the blue line, the more it confirms that the recent breakout attempt above 17,623 was a fake move. And also we can watch the daily RSI here, because if you take the lows line, there's a line right there that the market needs to hold. So bouncing on this line and moving higher would be positive. Keep in mind that the last time we broke a trend line, similar to the one we have right now, is during this period here in somewhere around there. We broke a trend line in December, which brought us off. In fact, in November, which broke off those highs. We haven't been back to those levels since then. So right now, the market does need to hold this level here or that line. Otherwise, a break of that would suggest that now we are, yes, preparing to pull back. So until we can break that, maybe the market might have a chance of bouncing. There's also another line, which is a simple trend line connecting the daily closing lows. We can draw it like that the market needs to be holding above. So here on the daily, little bit of a indecision, but net, the market is below 17,623, which is the recent breakout, and that breakout attempt, as long as the market is failing to move above that level, might suggest that we are running out of momentum in the short term. If you take a look at the Dow Hourly, you can see here we were making higher highs in price for a while there. While all this was taking place, the RSI made lower lows, and we were suggesting that because the RSI did not move above 61.8 on the hourly, and here I'm using RSI setting of 26. So we had seen this negative divergence, and the market had failed to hold above 61.8 here during these highs here, suggesting that there was going to be a pullback, and we've grandly or slowly been moving lower or sideways. Now, so we have top side resistance. Now we have bottom side support that is coming into play, and you can see that the market is pretty much stuck in a range here because this line connects the lows on the RSI on the hourly, and it's been holding on that blue line since. So the only way we can really know true direction in the market is a couple of things here have to play out. Either we break out for a continued move higher, or the market breaks the lows line for the beginning of a swing trade to the downside. So until that resolves, tough to tell which way the market wants to pick. As we have been discussing the last couple of weekends, the Dow transports were back to resistance. If you connect the RSI highs, simple line, and you see we came and hit that resistance line, and since the last 3-4 weeks we've been down. So that makes sense. It also corresponds very nicely with the previous break off the highs. So there was a break here on the RSI in late 2014, bringing the market off the weekly closing highs there, and we've been drawing a line that was tested recently. So that red line was tested recently, and again the market failed to move above that. So we've been expecting a pullback, and we're getting that pullback. So that consistent with this red line. The red line was a problem here in early 2015 during these highs. So until the market can clear those two lines to the upside, we're still in a situation where the market could easily pull back. Now keep in mind that should we move below 50 on the week, we move below 50 on the weekly RSI, expect a big down week. So right now, coming close to cracking below 50, a move below 50 would suggest a big down week whenever it moves below 50, if it does move below 50, that is. Now if you take a look at the monthly chart for the Dow transports, we can see a little bit of a bearish developing situation on multiple fronts. Number one, take a look at the channel line connecting monthly closing highs there, and the recent monthly closing high. You get a nice straight line that is acting as resistance, and this is 34 months of monthly data. So this is already showing resistance here, and the market is responding to that. So that's not good. Also, take note of the fact that we are below this previous monthly closing low for 2015, and the level there was 7785.63. Once we cracked through that here, the market went on a huge plunge for the transports. We've come all the way back, moved above it, but now we are threatening to move back below the previous break line. So we can see that the market is reclaiming the bearish territory. Keep in mind that now we are back below 50 on the monthly RSI, which could suggest that this could easily be a big down month for markets. The last time we moved below 50 on the monthly was during this month here, which was a big down month for the Dow Transport. So the more we stay below 50 on the monthly RSI, the more this might turn out to be a confirmed down month of some substantial size. If you take a look at the S&P 500, you can see that if you draw a line connecting that weekly closing high, intraday high, and this closing high on a weekly basis, you can draw a nice straight line. So those 3 points do make some type of a line there, and you can see that over the last week or so we came there, we hit that line, and right now we are responding to it by moving lower. So one can still expect the market to struggle until it can move above that red line. And just like the other markets, we see that the market is coming back to test the top side of its weekly RSI, simple line. So right there, coming back to test that blue line, we are back below it, which is not good, and also coming off the break on this red line is also a problem right now, because we've hit that actually twice over the last 3-4 weeks, and the market has not been able to move above that. And this red line comes from the previous break right here, and that red line was a problem in July for the highs there on a weekly closing basis, resistance here in early November for the highs there, resistance here for the month of November also for the highs there. And we've come here and we are showing resistance on the weekly chart until the market can move above the price resistance. So until the market can clear that resistance, until the market can clear those two resistance lines, we have to assume that net what the market is telling us, that more than likely the next meaningful move in the market is going to be to the downside. On the S&P 500 daily, we can now see that the recent breakout here, it seems to be, so that breakout is now in question. The market is back below that number, and the breakout there was above 2051.60. So that one seems to be failing. Also keep in mind that we are coming back to test the lows line. So the line connecting RSI lows is being tested. If it can hold, that's good. Otherwise, if the market slips below that line of support on a short-term basis, we can expect some type of a pullback. The last time we broke a trend line on the S&P 500 was this trend line here on the RSI. So that break right there brought the market off the highs there of October. So a break here would also suggest that we might be looking for a pullback. Otherwise, support might be good for the market. We can watch the MACDs here. And here on the MACDs, I'm using a short-term setting of 583. It's my short-term MACD setting. And what we can see here is that there was a break of a trend line here in November. That break brought the market off the highs there. Right now, we might be looking at another potential break of the trend line here, which might suggest that these highs could hold for a couple of weeks at the very least. And keep in mind that whenever you move below, back below a break of a trend line, followed by a move below zero, which is this move here in December, can suggest lower prices. We also moved here back below zero, which was this move lower. And now we are just about to move zero on the MACD. So lots of things pointing here to the potential for a pullback on that daily chart. On the S&P 500 hourly, take a look at this line connecting RSI lows. This line continues to hold, and until we can break this line, the market should be sideways at the very least, or at the very worst. Otherwise, should we break through that trend line on the hourly, that is when we can start seeing a significant pullback in the market. Take a look at the 30-minute chart for the SPX. And again, we can see that on a short-term basis, we can see two lines. The first line is a topside resistance line in the 30-minute chart for the SPX. Even at the highs of Friday's session, we hit that line there and stalled. And yet we have a nice line of support. And this line of support comes from this perfect entry off the lows here in February, and the market went on a nice run. In fact, the market continues to trade above that, so nice entry on hindsight, right? So we can use that RSI movement for future reference, which is what I call uniformity method. And so this entry level there, draw a line from there, and every time the market touches that line with uniform action, that's the key, uniform action, it tends to be a nice place to go long. Here, uniform action for the lows there, uniform action here for the lows right there, and again we touch that for the lows there. So until we either break above this resistance line on the top side or we break below the support line, looks like markets are sideways. And of course the next swing trade is going to be determined by either if we break out for a nice move higher or if we break down for a move lower. So in conclusion, if we take a look at the monthly chart, as long as the monthly price is down for the month, let's start giving the benefit of the doubt to a downside market. Why? Because we are coming back to test the monthly closing highs. So you can draw a line connecting monthly closing highs. We hit that at the end of last month, and now we are down back below that channel. There's also a trend line connecting RSI highs. You can draw it something like that coming into play. So I think the more we are down for the month, the more one can set themselves for a pullback in the market. Pretty much that would be my thinking here, even though it's not that clear. Keep in mind that the market could easily eventually move above that trend line and also move above this RSI trend line. But for now, the market is down for the month. So I think personally, I would give the market some leeway to move lower. Yet, we've talked about this over many months. As long as the market is holding above 50 on its monthly RSI, going back to 1990, bouncing on RSI 50 on the monthly has been a nice place to re-enter the market for a major move higher. We even came close here in 98, and again since 09 we've bounced on the 50 here in 2010, we bounced on the 50 in 2011, and we've come here over the last couple of months, we've bounced on that twice. So that double bottom support on the S&P 500 is actually indication that the market, if it chooses to, can eventually move to new highs. So that's, just be aware of that. Every time over the last couple of years we bounced on this 50 line, the market went to new highs. Every single time the market would go to new highs, as you can see. So here we have to be aware that the market could very easily, after finding support here, if it wants to, the market can very easily go back to new highs in the coming months. All this is dependent on how things play out on the monthly and if the market can continue holding above 50. At some point, should the market move below 50 on the S&P 500, like we've seen in other markets across the globe, so any movement back below 50 would be bearish. But for now, the market is holding above 50. Eric Muadh, Muadh.com. I'm going to leave you here with about 10 minutes before the conclusion of the week and before the conclusion of Friday's session. Wish you a good weekend. Otherwise, be on the lookout for part 2 of this weekend's market analysis video, which is for Muadh.com subscribers. Otherwise, enjoy your weekend. Good luck, peace, and blessings. I am out.